Hello, 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 hello. What's going on, everybody? All right, guys. So, lots of stuff to talk about right now. Don't know where to start, so we're just going to kind of start from somewhere and kind of circle it back. It'll all make sense in this jumbled up thing we call due diligence. Sorry I was late. I was looking at some numbers, and I was. By the way, thank you, Jeff. Uh, One of the members in our lifetime access stock terminal and mastering and bundle. I really appreciate you, man. Yeah, so as you guys can see, I need your help, when I ask a question. So thank you. This is good that we got that data. Specifically, helped me found this graph here, which is the decade for the Medicare Advantage rates increases. So this is good. This is good. So first things first, let's go ahead and go to the comments. What's going on, B-Rad Cooley? Let's go. Finally caught another live. Al should be excited for next week. Don't forget to tongue punch the like button. Oh, okay. I'm gonna start saying that. Smash the like button with your tongue. While we wait in silence, anyone do anything fun today? Oh, I like that. A little waiting music here. Yeah. Added one more. I don't know, guys. We should talk about Pfizer. I'm just kidding. Catalog Solutions. Good. Seems like Al's circle of competence. Let me know if anyone has any views on this. Nice. Sounds like a biotech company. Be very careful, cautious. They hold a very high degree of risk. Yeah, I agree. Biotech, very scary. Potential spatter. B. Robert. Just reading through the comments. What's going on, Melissa? We got a woman in the house. Woo! All right. Sorry. Just very excited when we talk about stocks and stuff. It's nice to see a woman joining our platform. Woo! All right. What's going on? Freaky, nice to have in Clovertown. I'm ready to be a multi-millionaire. I'm always here, just quiet. Okay, good. I'm happy. Monday night, be red. Friday, Clove, strong, 420. What does Rafiki? Just going through the comments, saw the Twitter post. This is negative news for Clover disruption. We're going to be talking about that. So Andrew, again, I don't want to. I have your email, but I don't want to personally message you on the email. I'm just going to say it online, and then if it gets to you, it gets to you. If it doesn't, it doesn't. I mean, it's ultimately. I think I have the answer, but we'll go from there. What's going on, Kev? Oh Jesus, the look. Yikes. OGB Rob, you helped me keep me strong during the hard times. Yeah, that's true. He's always been around. Likewise, so Humana getting bailed out. Yeah, so let's go ahead and talk about this. Okay, so kind of get caught up on the chat right now. So first things first. Wow, what a great week! 15% and holy moly, 15% in a week for Clover. I mean, this thing was at $3.60, and this thing just bumped up 15%. Year to date, from the beginning of the year, we're up 14%. So I'm really excited, guys. I mean, this is pretty good. I mean, that's actually a little higher because if you take the low down here this year and you go to the low to the old way, the high, we're looking at 17%. So it's pretty good. Yeah, I agree with you, Ken. Yeah, I think that's the conclusion I'm getting to, but let's just kind of work it together, and then all of us can arrive to that conclusion, because it's good to have a community where we talk. Yeah, exactly. Knowing how the big boys always get saved. This is not true. Listen, this is not true capitalism, but we'll see. So just very quickly before we get into the nitty gritty, I just want to. What? Why'd you sign me out? Hold on. One moment. Let me sign back in, of course, because it signed me out. So hold on. It's been doing that a lot. It's really silly. Hold on. This little silly, stupid thing here. Okay, good. Now we're back. So let me just kind of, yeah, it's only a proposal. Exactly. But again, the intelligent investor looks at any avenues for a disruption in the thesis. This slows down the thesis if this gets approved. So we'll be talking about this. This is just a proposal. This is correct, right? It's in the title, right? Proposed, right? It's in our thumbnail, proposed. Okay. So, well, yeah, I agree. Okay, but still, we need to talk about it, right? Because it's really important, right? So if the market closes positive for the first 5 days of the year, and it's if it's especially in a year that's up prior 10%, it shows an 82 cents chance of continued gains. So I think the bull market's intact. I said this a couple days ago. So I said, the S&P may experience short-term declines to monthly new lows due to rising bond yields and bearish market pressure, but it's likely to find support around 5,700 to 5829 before rebounding into late January with industrials and small caps presenting opportunities. I also want to talk about ARK Invest. When Clover does become profitable, I think ARK is going to invest into Clover just like they did into Palantir. So keep an eye on that, right? Because it's going to add. I can already see the comments. This lady is literally going after a meme stock, right? Imagine, right? Because people, how people are on Twitter. So the first things here, the recent jobs report from the BLS face declining like people are not essentially, it's not reliable anymore due to funding cuts and outdated surveying models and methods, so causing significant data revisions and growing skepticism. It's this job report, it does complicate economic forecasting and interest rate decisions. So definitely it's not something I'm going to hang my hat on, especially when I look at inflation. The thing is, the FOMC acknowledges easing core inflation, but trade uncertainties keep the S&P 500 below 5829 with the support nearing 5700. So what I'm thinking here is, here's this blue line and here's the S&P 500, and you can see the support line here 5700. I'm thinking we still have we could rebound into that CPI, right? But I think we may touch down here, which is interesting because the market's going down, but then Clover's going up, and it has to do probably with Duke and whatnot. But you could see that I think we're going to have a support touch here before we go ahead and rebound. Okay, and we've had instances where the S&P goes below the 50-day yellow line Sybil moving average. I mean, it happened literally right here, and if you were to look at it, it happened at this level right there. So again, guys, I'm looking for this. I'm looking for that RSI to reset, just like it reset down here. I'm looking for it to basically touch down here, right? So we'll see. We'll see what happens. And then after it touches down here, I think we're going to get some calibration and then get a MACD on the positive side. So I think that's kind of what I'm looking at for the S&P. Now, in terms of University of Michigan inflation expectation, I think, with this 3.3%, I think this is politically driven. Democrats report higher inflation fears by positive 4.2%, while Republicans report almost none. Now, if you think Republicans are liars and cheaters and scammers and Democrats are honest, well, if you look at the inflation report, when Biden was president, it was actually reversed. The Democrats were saying almost none inflation, and the Republicans were saying there was going to be inflation. It just so happens that since the person that is in charge is part of their political party system, they don't want to talk crap, because obviously we are driven by emotion, even at the highest of power, and not by data-driven analysis. So it's all pretty much BS, right? So this divide reflects political sentiment rather than economic fundamentals. Despite strong jobs report, wage growth remains steady at 3.9%. So I think this data is kind of botched, suggesting no immediate inflation risk. So markets are pretty turbulent in the near term, but fundamentals haven't changed. The VIX is nearing 20, which it signals like panic selling. And again, remember the first 5 days, as I said here, of the market was actually positive, which is a bullish omen. And again, I think the bottom line here is don't overreact. I think the University of Michigan data is pretty biased. Okay, so I'm obviously still bullish in the market, right? So I'm trying to give you the big macro. Hold on, I'm trying to give you the big macro here, and I hope we can slowly basically dissect down the market once I give you this data here. Another thing I want to add really quickly is just kind of a regurgitation of what we said here. Let me just let me go here. So equity markets are facing short-term turbulence driven by inflation fears. But again, the fundamentals remain stable. So again, I'm not really too scared. But the S&P 500 are worried, right? So S&P 500 remains in the bearish short-term pattern. But I do believe that we may get a potential bottom next week, leading into that CPI. So, because next week we have a CPI report, but again, the bottom hasn't really been confirmed yet, so we're going to see. But I do believe we're maybe going to get a bounce to mid to late January. It's currently January 11. So, again, I'm like still tired today, so my voice is not. I'm just really exhausted, guys. But I just wanted to kind of really talk about just the what's going on in the market, because a lot has happened this week, and I just want to because like when I talk, I assume you know this, but sometimes like you guys don't know this. So I just want to just kind of put that out there. So, looking at stage analysis real quick, I was hoping that Humana is here, because here's like the simple move. Here's the 200-day simple moving average, which is just another way of calling it a 30-week simple moving average. I thought Humana was basically going under, and obviously it still is. I mean, if you look at it right now and look at, let's say, week, you could see overall, this is that 200-day, the red line simple moving average. So I think this is basically it's entering stage 4. And I think that's what stage 4 is. The question now is, the government now just did something, and potentially this may basically revert it back to stage 1, but could it be a fake out where it looks like it's about to go up and touch the 200-day, but then fail and then continue going back down? I don't know, right? I don't know. I don't know, right? So this is something that I'm monitoring, and that you should too. So, what happened? What happened? Like what happened on Friday? Well, something happened, and that's why we're making this video. So, United Healthcare went ahead and upped. Look at that jump in United Healthcare. Okay, that's a jump. Okay, look at CVS. That's a jump. Okay, but look at this one, Humana. That's a big jump. That's a big jump. Okay, look at, we're at 268 or whatever to 290. That is a big freaking jump. Okay. All right. So why? What's going on? This is obviously, it's not coincidence. So I'll talk about that later. Yes. So we'll look at this article first. This is a nice one. So CMS proposed increasing Medicare Advantage benchmark payments by 2.2%, or $21 billion. They got a bailout pretty much. It's proposed, but I'm not really too. I don't get it why this administration is doing this. This is the Democratic administration, because they recently did cuts, but then all of a sudden they went ahead and now they're doing this. And why? Could it be that the healthcare insurance company says, if you help us now, then potentially we'll be able to give you money for the election in 2 years because you've lost a lot of the seats? Could it be this is a money grab for the government, maybe for Democrats to make money? Again, I'm speculating here. I don't know. But very clearly, this contradicts, this here, ladies and gentlemen, contradicts what Elon's trying to do for the Department of Government Efficiency. I think it's, if they let this slide, and I think this is why the Biden administration did this, is just trying to get into the graces of these companies potentially. Then, and let's say, for example, if Elon Musk and Vivek doesn't, if Elon Musk and Vivek, let's say, don't do anything about this, then I'm going to call them the Department of Farts. That's what I'm going to call about, because all I smell is fart and bullshit, right? Because, you know what I mean? So I this is a pretty big deal here, right? They're pretty much, that's $21 billion, right? So, and how much of that is going to go into, corporate, again, this is not, I don't like this, right? Because if you go ahead now and go to the article, let me think. Is it the article here? Give me a moment. Yeah. Most insurers were not happy at CMS when it followed through with a 0.17 cut to MA benchmark payments. At the time, CMS, the average payment increase was 3.7%, and a $16 billion increase over the previous year. So this obviously is a pretty good increase. But if you click on most insurers, look what title you get. You get, I think it makes sense, Clover Health CEO Andrew Toy defends MA rate cut. So the problem is this, in April 3rd of 2024, when Clover was trading at 60 cents, it gave Clover an opportunity to be in the front lines, right? Because they were the only insurance company that were defending the rate cut for MA plans. It gave a positive push for the counterpart assistant to basically take heed that there's something that they're doing. The issue is if this freaking government goes in and bails them out, then ultimately this article that says Humana Medicare Advantage may fail without regulator intervention threatening core business. Well, they just got the regulator intervention with potentially basically getting this proposed increase. And the issue and the question that I have is, well, does this make kind of Clover go back in that background space behind the veil until its time comes, and maybe potentially giving an opportunity for its competitors to create some form of their own Clover assistant? Because these are all questions that we must raise. At least I'm raising as an intelligent investor. And I hope that Andrew goes in and basically, talks about this, because after April 3rd, Andrew started to become even a bigger leader in the MA space, because while everyone was pulling out, he was doubling down. But the problem is let's say, for example, you are prepared for this change. And let's say, let's say we are playing a game back in a resimulation of Noah's Ark. And Clover basically built Noah's Ark, right? And they built this ark. But all of a sudden, they don't have a lot of people on there. Maybe they have like 80,000 people on there, right? In this ark. But Humana didn't really build a good ark, so they're basically sinking. But they have a lot more people on there. So I decide, if I'm the government, I'm like, you know what? I'm going to basically give, Humana more building material and some resources to basically survive this flood. And this is not capitalism, in my opinion. Government should not intervene. And this is the central argument of Republicans, at least these new Republicans that are coming in. So again, this is a political discussion, guys, because remember, the government gives money to CMS. CMS gives money to the healthcare insurance. So if you don't want to talk about politics, go work your 9-to-5 job, right? This is a political discussion now, right? So the thing is I think it's a big thing, right? I think this might happen. I think Elon and Vivek are going to attack this, which is why I think the Biden administration pulled back on their already approved cut. So I don't know. Again, lots of uncertainties in this, because this is just a proposal. But I'm looking at the Biden administration. I'm like, why are you circulating back? Deals and talks were made right now. All of tech is siding with Trump now. And these healthcare insurance companies may have said the Trump administration may put us under the chopping block. Let's make a deal with Biden administration. And let's say we're going to give you money in 2 years from now. Right? Because again, in 2 years, we're going to get the election for the House and Congress, right? The Senate and the House, right? So I don't know. Again, this is speculation, but I'm just trying to figure out, because this allowed Clover to really make its voice heard. So that, again, so that's that argument. I just wanted to put that there, right? Because, you have this article here, but then it cites in this article, if you click on this button, it cites Clover Health's CEO. So, he's become a pretty prominent voice. Okay. So now let's go, because then this thing went up. Okay, could this be a change in fundamentals for Humana? Absolutely. They're going to make more money now, right? But why am I attacking Humana? Well, this is the Humana's financials. When COVID happened, they became, they dropped their free cash flow. And the rate of drop of free cash flow from 2020 to 2021, if you were to graph the statistical analysis of the drop, it was actually way more of the percentage drop than that of United Healthcare, which signaled to me that Humana is actually not that strong of a company in terms of withering stress. And I think them pulling out and this year basically getting hit hard is them basically refurbishing themselves to handle turbulence for the next 5 to 10 years. They're sheltering in. Now, the reason also why they dropped between 2020 to 2021 is if you go ahead and look at the CMS change to Medicare Advantage plan payment rates over the past decade, from 2020 to 2021, they got a cut, right? So, of course, that was a good example for me to see what insurance company could get disrupted. And I'm just kind of teaching you kind of what I like to look at. We obviously got a big cut, and now we're getting like a 4 point again. We're getting a raise, right? So from the previous year, there's a lot of talk, and one person I like to talk to is saying who's in this Medicare Advantage realm is saying they actually need more than 6% in order to survive and thrive. Humana. So this may still give them pressure to where Clover will still have an opportunity to win. I don't know if 6% is what they need. I don't know what they need, but that's what I heard. But again, I don't know how this is going to play out. If I was to make an educated, and this is just a guess, I mean, your guess is as good as mine. But if I was to make a guess right now and just take all this data and just internalize it, I would first need to kind of state everything that I know. Okay. So CMS increased this. Humana pulled out. It'll be costly for Humana to pull back in where they have pulled out. Because if they pull back in, so Humana has two decisions. Because they did this increase, Humana can pull back in where Clover Humana can pull back in Clover Health's market where it pulled out. Is it too late now? Yes, they already kicked those people off and they built some form of a bad reputation, right? So they pulled out, and if they come back in, I don't think they're going to grow as much as Clover, but potentially they might, given their star ratings are still low. So maybe they could get more clients than Clover, but they've kind of built a sour taste in that area. So you could get something like that. Or they could double down in markets where Clover's not that strong, or probably Clover's not there. And they can use this to create a better than anticipated premium plan. Okay. But the thing, again, it's tough to say. So the main thing is Clover continuing? Is Clover going to still get that growth phase? I think so, right? In terms of full disruption, I need more data. I need to review the quarterly reports, specifically the next quarterly reports for Humana. If Andrew Toy is not, again, I tagged you, Andrew. I hope you listen. If not, I'll get the data somewhere else, right? But, I will have to listen to the quarterly reports for Humana to see what the CEO says, what he's going to do. Is he going to go back into these markets, or is he just going to double down on another market? I think the latter will be better. The point is, I need to know what these incumbents are going to be doing and how that's going to affect Clover. And I need to know if Clover is going to continuously be able to get disrupted. In terms of, can they still disrupt? Now, remember, Clover is advertising itself as 4 stars now, and it's going to get paid as 4 stars in 2026. So I think Clover is going to be increasing growth no matter what, because, remember what Steve West said? He said that plans that get 4 stars, those are good plans, and people go to those plans. So I think we're still going to get more increases, but here's the problem is, does this increase that they're getting, the $21 billion increase to MA plans, will it cause a point where it'll delay the disruption process? Because Clover's going to make more money too now, right? And what B-Rad Cooley's trying to say is, well, if all tides are lifted, then, it would just basically be a zero-sum game, and Clover will be able to showcase itself better. Okay? So again, lots to look at. Again, this is investing, right? This is what, stuff changes, guys. Okay. So there's that. You can go and read this. This is their official news release from cms.gov. We talked about this. We talked about this. We talked about this. Clover posted this on Friday, January 10. Feel good Friday. Thought of the day. I don't know what time they posted this. Was it before the release of January 10? Or was it after? Maybe they're trying to send us a signal that maybe we should continue to dream. I don't know. Again, B-Rad Cooley saying tides are rising. I agree with that. But I would rather them die. Sorry. I would rather Humana fail. I don't want them, to rise their tides. But it's okay. So it is what it is, right? So B-Rad Cooley, right? So yeah, so that's kind of what I'm talking about here. Okay, so we got this. So we talked about this. Okay, let's talk about some technical analysis real quick. So here's this. We talked about SPY. Let's talk about CLOV. So you go to the daily real quick. Definitely a lot going on here. So this, you see how the stock price is going up? This is called an ascending a triangle, right? That's what I call it, right? And then it goes up, and then it breaks out. But I've seen them break down, but it's support and it breaks out. I do think we're breaking out, right? I do think we're breaking out. So, I think we're going to go up, right? Based off of kind of technical analysis. The problem here, the problem is, well, there's no problem. I just want to tell you the funny thing is the market, has been pretty rad, right? The Russell's down by 2.2%. S&P 500. I mean, everyone's down, right? But if you look at Clover during that day, Clover went down to 356. It dropped 3%, and then all of a sudden went up to $3.70. So Clover went up. It went ahead and dropped. That's better. Just look at here. It went ahead and dropped, and then it literally went up to 370. It literally went up. I mean, holy crap, right? Let's look at the hour chart. Like this thing, remember I told you that ascending triangle, how it's literally getting support. It goes pop, 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 and then it goes pop, right? That's kind of what I'm seeing here with the with what that is, right? So I'm thinking, on a down day, we're going to 370, which is like counterintuitive. Like most people are saying, well, we're going to go down because the market's down. All of a sudden, the market's going up. You could start seeing there's a discrepancy now in Clover. And in fact, if you want to call it a meme stock, I think you're dumb because look at AMC. Well, let's just say, my apologies. I don't want to call you dumb. I just don't think you're informed, right? So I think AMC is down, right, during this time, while we're actually going up. Now, in the defense of other big companies, they're going up too, right? But again, we are actually above our 200-day, and we just basically broke out of it. That's why we got that huge jump. So again, lots of things to talk about. You look at the quarterly. Look at the quarterly. I mean, I think we're going to get a U shape. I think if we might even $7-6 plus. I think we're getting there, right? And that, remember I told you when we were here. Remember I made that post and I said that this is a signal we're about to break, and you could see this MACD. You see how it's curling up? I think we're getting into that explosive phase right now. We're getting into an explosive phase. Okay, again, you don't have to have a lot of squiggly lines to do technical analysis. The whole point of technical analysis is to take a lot of data and make sense of it, right? We're still not even oversold yet on the RSI on the quarterly. You feel me? Okay, so there's that. Okay. Talked about that. Stocks in the short term are risky, which kind of goes back in we're talking about how like I think we're gonna go down 5,700 on the S&P, and then late January I think we're gonna go up, and I think that's why in the medium term it's good. The market's actually fearful, right? The market's pretty fearful, right? Again, when the market's fearful, it's green. You should buy, right? When the market goes down, people become fearful, and they like to sell because they're misinformed. So we're at that level now. We're getting that fear, so that's good. Again, if you like our insights, and if you like what we do and how we do it, this will be expiring soon. Take advantage. It's lifetime access. You get to join a group that has over $55 million and 2.5 billion outputs of institutionally graded data, and our analysis that is composed of institutional and investors and hedge fund thought processes. So definitely take advantage. So there's that. But like we said, these incumbents are growing, and it's too big to fail. Lots of big boys in those companies. It's true. So the question now is it more waiting? I don't know. Is it more waiting? These are all good questions. And again, I have a lot to show you here, stuff that you've seen before, but it's good to kind of reiterate. What was up with that price target reiteration? The guy said $6 price target again. Just say, that was kind of funny. That was weird. He probably got excited. The stock is going up. He's like, yeah, I'm making money. $6, guys. That's a funny analyst. But yeah. So again, lots of thoughts in my head right now, right? Lots of things. They're too big to fail, or maybe CMS knows about Clover. David Sachs knows about Clover, and they're kicking ass. And David Sachs is the AI guy and the crypto guy, right? So maybe they're just waiting for Clover to kind of capture market share, and then they'll let disruption happen. Because then Clover can easily be able to handle all the millions of people that Humana has. Again, I'm speculating here, right? But the question now is, what's the overall trend of Clover? Is it going to go bankrupt? Are we going to die? No, I don't think so. What's the overall trend for spending? I think Americans, and let me just tell you something. I think Americans are sick and tired of healthcare companies screwing the American people. That's number one. I think Americans are tired of the debt that we have in the country, the $1 trillion of debt. Number three, I don't like to use this example, but after the killing of the United Healthcare CEO, it sparked a lot of conversations regarding insurance practices, to a point where the United Healthcare shareholders were like, hey, why are we denying a lot of claims here? To a point where it's like, this is actually hurting the reputation of the business. So I think that with the Republican Party now, it's kind of weird party, to be honest, being surrounded by a lot of executives. I think these executives are going to look at these companies, and I think they're going to want them to be fiscally responsible. And I don't think that these increases are going to happen anymore. And I think that's why there's been a shift in who supports who. Because Mark Zuckerberg now has kissed the ring of Donald Trump. And a lot of, Jeff Bezos has kissed the ring of Donald Trump. What I'm trying to tell you is that tech that historically tech supports Democrats. I think we may be witnessing a shift. I think Biden is like, what the hell? These people are going to Mar-a-Lago and, because they're trying to make money. They want their companies to survive. And I think the healthcare industry went to the Republican Party and they said, no, we need to be fiscally responsible. And I think the killing of the United Healthcare CEO and everything like that is definitely terrible. But I think it's caused these folks to kind of rethink the situation. So I think the Republican Party, which I actually thought would be a benefit to the incumbents, may actually be a detriment, specifically in due the part that David Sachs has Elon's and Trump's ear. And the fact that David Sachs follows Clover on his Twitter, it's very clear. And obviously David Sachs is friends with Chamath. It's very clear that Clover Health has a benefit to this. And I think Humana and a lot of these healthcare providers struck a deal with the Biden administration to say, if you readjust it, because why would they propose this? I mean, when's the inauguration? Was it January 19 or what? Hold on. When is the inauguration? January 20th, 2021. I don't like how this just doesn't give me the date. Anywho, it's in less than 10 days. So why are they proposing this in less than 10 days? I think something happened. Why not wait? I think something happened, and this might actually gain some traction. In fact, Belize, one of our OG members posted this. If I can find it, let me just go here. Yeah. He posted this. And I hope that this goes viral. I really do. If you guys actually care, go ahead and like and retweet this guy named Ed. Okay? He makes some comments, but specifically talking about the CMS proposed $21 billion increase for Medicare Advantage. Okay, you can read these. But the big thing is what he said. I'm going to read the comments soon, guys. I want to get through this here, okay? How, in the name of responsible fiscal government, should CMS be proposing major increase at plus 4.4% in Medicare Advantage for 2026 now, when there's exactly 9 days left in the current administration? If there was any doubt in my mind about how captured this administration was by the healthcare plans, look no further than this proposed rule. On top of 2026 increase, the MA plans received a plus 3% increase in 2024 and nearly a plus 4% in 2025. For what? I don't know what that is. Engaging in fraud and abuse with systemic programs to engage in diagnosis based on upcoding of MA beneficiaries. Also check series of Wall Street Journal article on MA upcoding issues. This is a big deal. In fact, when I was giving my presentation at Barrow, we talked about that exact article that he was referencing. As recently as this past month, Department of Government Efficiency, Elon Musk and Vivek, day one, this proposed rule should be pulled and the entire MA reimbursement environment should be seriously questioned. You want tens of hundreds of billions of savings? They are right here in MA plans. All the while, physicians have received their fifth in 5 years Medicare cuts in 2025. That's completely not the model for the future. Doctors have been actually getting less money as doctors, which is not good. That's number uno, okay? That's number one. Number two, they can save $21 billion. I mean, like, this is literally ripe in Vivek's eyes. They want to go ahead and they want to cut $1 trillion in spending. Well, here's 21 billion. So again, I don't know what this administration is thinking. I'll give you another speculation, and please comment. Again, I do fundamental analysis. This is just interpreting the data, right? I need your guys' help on this, right? Which is why we have the lifetime access, right? We need to have discussions on this, okay? That's why we have the lifetime access, so we could talk about this and other companies so we can make money, okay? So let's talk. Could it be the Democratic Party? Because Democrats are pretty sneaky, right? Could it be the Democratic Party is starting to do a bait and switch? Could it be that? So the first hypothesis, I said, well, maybe, the incumbents went to the Democratic Party and said, if you save us, we will help you get elected in 2 years from now, Democrats to get elected. Or the Biden administration is, screw these guys. They want to save money. Well, we want these healthcare insurance companies to struggle, but Republicans want them to go up. So we'll do a reverse psychology. We will increase their payments by $21 billion so they can go ahead and actually cut that, so they can actually do what we want, which is to disrupt healthcare, which is what I thought they wanted to do, because their administration have been screwing Medicare Advantage, like incumbents like Humana and United Healthcare. The Democratic Party's actually been pretty disruptive by cutting from them. So maybe this is an ability for them to say, we'll do reverse psychology for the Republicans so they can cut this, which is exactly what we want. Again, I'm speculating here. Also, here's another variable I want to put in. Dr. Oz has investments in United Healthcare. Dr. Oz is pro Medicare Advantage. So potentially, is Dr. Oz pro this $21 billion? Duh. What did United Healthcare do? It went, look, it went up and went up, making Dr. Oz more money. So the question you have to ask yourself is, now we have just jumbled chessboard with Elon trying to save money, Elon and Vivek, and then Dr. Oz making money. So again, these next 2 to 3 months are going to be critical in trying to see what the hell's going on in this musical chairs. You understand what I'm saying? Please, I hope you understand what I'm saying. If not, please restart the video. There's a lot of information here. So this guy's pretty good. I like you. Like. And I commented here. All right. So let's keep going. So we talked about stage analysis. We talked about how Clover now is ranked number 1 in the industry, number 4 in the sector, and number 20 in overall for managed healthcare in the industry here, okay? Lots of money have left these incumbents. Now the argument is, could the money now come back to them? And maybe Clover gets a little instead of a lot? Again, these are all good questions. This is the overall price of Clover if there's no SaaS. This is what I think is going to happen. And I think this is pretty reasonable without SaaS and a reasonable amount of growth. Okay. This is Humana's free cash flow. It's negative. But with this change in CMS, it may go positive again. Andrew Toy has become a bigger leader when it comes with the CMS cuts, to where ELV stock and Blue Cross and CVS are liking his posts. Institutional ownership looks down, but if you do statistical analysis, it's actually up with a simple moving average. Gross margins are actually up in the 50% for Clover, indicating that analysts are thinking the SaaS, subscription as a service, may actually be a winner. Here's the statistical analysis for institutional ownership. We're above the simple moving average. Here's the institutional ownership. We've crossed the 5-day EMA, SMA, and trend line, and we have a MACD positive signal. Here's the Clover Health sentiment. It's positive. It used to be negative. Now it's positive. There's so many positive things. And in fact, now, if you go, let's say recently to Seeking Alpha, they've recently posted an article about Clover, and they labeled it with Humana and United Healthcare. These people, the Clover now is looked at as a dominant player now, a player that should not be taken as a joke. When I used to talk about Clover, Seeking used to laugh at me until now they came on my email and apologize, right? Now they realize that, holy shit, this is actually a real company, right? And, we actually, are going to be, pretty freaking rich, right? So, I don't have to tell you, we're going to be freaking rich. That's the ending conclusion there. In fact, if you go ahead and go to Clove and look at, let's say, news, you could see, shares up 8%. Bears are losing control over Clover Health. Clover Health reports strong third. These are all positive results. Okay. The question now is this disruption continuing? Is it going to happen? Or is this arrow going to have to be longer because it's going to take time? Looks like the government did try to intervene. And the question is this intervention enough, or has the damage already been done? We're going back to our mean reversion. One standard deviation move for Clover is a lot, so we're getting there. We ran out 1 million simulation models for intrinsic value, and we're getting up to plus $10. Monte Carlo simulation suggests that we're definitely going up. Clover's ranked top one out of, above all these other ones, right? And price targets are still, even to this day, above what it's actually trading on the market. And yeah, guys, it's pretty positive, right? And again, if you like the data we present, if you like the research that we have, we give research updates in our stock terminal, both intraday and without. If you like these types of things, and we give our options analysis where we give out kind of like what I'm doing, the wheeling strategy, and how I'm making passive income, which we'll talk about right now. Let me first look at the comment section. Let's see. I'm scrolling. Tough to say. It seems logical, right? B-Rob, on your comment. Do you see short-term pullback? Yeah, maybe. It seems logical. No Kathy, please. No Kathy. I'm just kind of scrolling. Don't get mad at me. I bought more shares Friday. That's pretty cool. You get 50 people watching an unscheduled live. No, it really is, and I'm happy because here's the thing. If you go to, the live viewers here and take a screenshot and kind of put it here. As of right now, we got 79 from Twitter or X and 83 from YouTube, which is 165 people. So that's pretty good. Not bad. This stock has failed so much in the past years, and I think we are due to rocket, in my humble opinion. I agree. How many of us, raise your hands? Dude, I'm not hungover. I'm just tired from working in the ICU. I got to go back tomorrow to work, but actually I have off tomorrow. I volunteered to go because, your boy's a freaking nerd. I need to learn, guys. I need to, I'm trying to be good at this stuff. Okay. So basically more waiting. Yeah. So honestly, Patrick, I think you have the right idea. Why don't we all sell, wait till, we see what Humana does, and then we get back in. Yeah, right. It's a rocket ship and a moon rover. Rover's out. He reiterated his buy rating, which is kind of funny. And I hope we do become the big boys. No, I'm not panicking. I just want us to have these discussions because it's good to again it's just this is we got to continuously what happens if Clove jumps to 40-50 bucks, we still got to evaluate it, right? Right. So you see got another yeah. That's good. I agree. 20th. Thank you guys so much. Backroom deals. B-Rob, so many moving parts. Human and health services, office of inspector. Oh my god, I suck at in abbreviations. Thank you. What happened? Yeah, so they're going to be releasing if they did any buybacks in the upcoming quarter. 80 members plus recent enrollment. Okay. Yes, it does. Good job, guys. All right, so now let's go ahead and open up something. Okay. And again, if you guys want my intraday options activities, all of our stock picks from an educational perspective, of course, our research analysis and our 2.5 outputs of data, take advantage of our sale. It is expiring soon. And we also have lifetime access to our course and data as well, lifetime access to the stock terminal, which is, unheard of. And our platform here and the course that will take you from zero to hero. So you actually know how to use the market, not let the market abuse and use you. That's the ultimate goal here. And you can see our performance, right? All right. So, right now we're at 118 million. Free cash, we're going 10%, 9.33. 501. This is an intrinsic value, guys. We're trading around near that base case. If Clover, based off of today's free cash flow, grows 30% next year, I think we're going to go up. And again, you take 118, divide that by 3 is 39.33, divided by 4 is 157.32. I think, if things are all considered and Clover returns to growth and we actually are pretty good, I think we may see anywhere between 20 to 30 bucks. So we'll say 25 bucks. So 25, let's say, multiplied by, let's say, 250,000 shares. That's about 6.2 million. So B-Rob, think about this. Okay, B-Rob. We got, if this goes to 25, you got, let's say 6.2 million. Okay. At that point, you decide, SaaS or no SaaS, this thing can either go to, let's say 25 or let's say 60 bucks. So we'll do two calculations. We'll do 25 here. Then we'll do, let's say 60. Okay. So 60 bucks is $15 million. Okay. So let's do the math here. Okay. So we could go ahead and we could do a max of 10%. That's stupid. I'm going to do 4%. Right. So if you do 4%, you can make about $250,000 a month at a $25 stock price. Again, not financial advice, it's just an example here, okay? Or if you do at $60 price, the Clover, you can make $600,000 a month. So here at $25, you can make $3 million a year. Here you'll make about $7.2 million a year. So this is kind of where that educational side of the stock terminal is going to play. Because you guys already see the passive income I'm making. And it's, you can see I've escaped the matrix, right? You can see the beauty of the stock terminal. You can see I took the matrix and I punched it in the gut and I escaped it, right? But, you can see, yes, it's crazy. I'm living on cloud 9 with this passive income. But imagine, when it gets higher, once you see $3 to $7.2 million a year of passive income, moves are going to be made. And we talked about this yesterday. What do we do with these moves? Right? Buy properties? I heard pizza places or something. There needs to be investments. And imagine, you buy houses. The houses make money because you rent them. Houses appreciate in value. There's a recession. Stock drops. Interest rates drop. Get a HELOC loan. Pull money out of the houses. You'll be able to pull more because the house appreciated. Take that money, dump it into stocks because stocks basically fell because it's a freaking recession. Stocks rebound. You make even more money. You do the wheel strategy. You pull money out. Do you go ahead and buy back the houses that you did a HELOC loan on? No, you let the government hold the bag. You let the bank hold the bag because it's a low interest rate. Duh. So then what do you do next? You buy more houses, right? And you buy those cash and you keep doing that. And then those houses appreciate. You obviously get 6 to 8% back because guess what? Every year, because you're going to have tenants. You take that, stocks crash again, interest rates fall. You pull, money out of the housing market because interest rates fall. You go in, buy the depressed stocks, and you do it over and over again. And that's when we start basically getting you that private jet, okay? You understand what I'm saying? So that, again, this is how the wealthy become wealthy. Again, this is not financial advice. This is just, I'm sharing with you how I broke out of the matrix, and I'm trying to show this to you. And this is why the lifetime access is going to be worth $5, $10, $15, $20,000. Because to get into our platform, you're going to have people with a total net worth combined of more than $500 million in the future to potentially $1 billion plus. This is a very elite group of people we're going to have, right? And it's going to be pretty impressive, right? So this is why, we're opening it up. We're trying to, again, get that group of hardworking people, right? Because it's easy to buy it in the future when you see the amount of money we're going to make. The people that are going to get it now are hungry, and I want people like that. Okay. All right. So, where are we? Where are we here? I hope so. Yeah, I hope so. All right, guys. I hope this was good. Live. I hope this was pretty good for you guys. And, that's it. That's all I have for you. Right? Long one. 57 minutes. Guys, that's a lot. Oh, I'm tired of talking. But, this is a lot. It's just the live would have been 30 minutes if it wasn't 20 minutes if it wasn't for that damn CMS thing. But it's okay. Love you guys a lot. And let's build that generational wealth. And to all the Lifetime Access members, can't wait to hear your thoughts. Can't wait to all of us be in that scene when that money and scene from Scarface. I think that's a really funny scene. Where it goes. Dun, 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 you know what I'm talking about? All right, guys. Love you a lot. Appreciate you, Patrick. Love you, Kevin. Thank you so much. Love you, Patrick. Appreciate you. Thank you, B-Rob, for everything and all the laughs. Yep, you definitely lick the like button, right? All right, guys. 90 watchers, seeing the grow is cool. Hopefully not as much support to the big boys. I agree. Yeah, and I think, for all the people that are watching, I want to just basically say thank you for watching. And I hope that you can see, we're doing hard due diligence here. There's no BS, no hype, no BS, straight talk. And that's all it is. No funny, transitions and YouTube bullshit to make the video look nice. This is just a raw channel with raw facts, raw discussions, all live. Nothing's planned. Just I have the tabs open here so we don't waste time. It's not a 3-hour live trying to get the data. So I come prepared for you guys, and I hope you appreciate that. Right? So there it is. If that's the conclusion, we shall see if that hypothesis plays out. I just wanted to bring it to you guys' attention because, that's what we do. All right. So love you guys. I'm going to go drink some water, and I'm just going to close my mouth for maybe an hour because I'm done talking. I'm tired. I'll see you on the next one.